Hey everyone, welcome back to the Finmineering channel. If you've been watching my videos since I launched the channel late last year, you probably jumped into some of the mining stories with me. The stocks we covered in reverse order were Perseus, Whitehaven Coal, Aurelia, Greatland Gold, New Gold and Sandfire. But fast forward to the end of March and the results are all over the place. One of the stock performance is up almost 20% since January, while the gold names I covered got absolutely hammered. For this video, I'm providing an update of the performance of each of the stocks I've covered, the impact of the Iran war, the collapse in rate cut expectations, and why gold prices crashed despite geopolitical tensions. It's quite interesting, so let's dive in. Since I've started the channel, I've been sharing with you simplified analysis of mining financial and operational results. I'll share a link to each of the videos in the description if this is the first time you're visiting the channel. There are a few charts coming up today. And firstly, let's check out the stock performance since December 2025. In orange, we can see Sandfire starts strong and then rolls over. In blue, New Gold climbs nicely before the acquisition, Greatland Gold in green, and Perseus in purple looks okay early on and then fade. Whitehaven in black grinds higher, and Aurelia in the peach color is the most volatile. The next chart shows the performance of each stock since the respective videos came out. You can see roughly the dates the videos dropped, and the divergence is crystal clear. Most of the stocks peaked around late January to mid-February, then everything flipped in the last 2 weeks of February, and we all know what happened then. Just before we move on, please remember that the aim of these videos is not to provide financial or investing advice, nor is it to pick the best of the best stocks. We cover stocks that we find interesting and share our findings, and that's about the extent of it. Right, back on track then. So let's take a further look at what happened since February. US and Israel began military action against Iran, which led to a wider regional conflict in the Gulf. Fear set in over access to the Strait of Hormuz, which is a major naval choke point for energy and other commodities. Normally this sort of situation is good for gold, right? Safe haven bid and all that. Except, look at this chart. Gold in yellow had been ripping to almost $5,300 an ounce towards the end of February, right in line with what we saw in our other videos. Then, right as the war news hits, it reverses and drops over 16% in a matter of weeks to around $4,450 an ounce. Why? Well, look at the gray area. It represents the probability of a Fed rate cut in 2026. It was sitting around 75 to 85% through February, then collapses to almost zero. The oil spike from the war sent inflation fears through the roof. Markets suddenly priced in no rate cuts, maybe even hikes. Higher rates plus a strong US dollar seem to have been what really hurt gold's momentum. Check out the gold versus DXY chart. DXY represents dollar strength. As soon as the dollar index in the red explodes higher in early March, gold gets absolutely crushed. Saying that you're going to run a gold company or make gold-related investment decisions because a certain person is in office, and by extension that ensuing uncertainty will be great for gold, is not always true. Look at the fundamentals and think big picture. It's not easy, I'll be the first to admit. Now, the commodity charts tell the rest of the story. All of these are in US dollars. Gold in yellow peaks and plunges, while oil in grey, and especially thermal coal in green, surge. Metallurgical coal purple stays strong. Flip to Australian dollars is the same picture, but even clearer for Aussie miners. The impact of lower gold prices and a stronger US dollar is a double whammy for gold miners. And on the other hand, thermal coal is doing really well. And here we can see the correlation between energy coal and oil, showing an almost perfect correlation. Oil jumps and energy coal follows because it becomes the energy security alternative. So the war created a massive commodity divergence. Gold gets sold off on monetary policy fear, while energy wins big. That single macroeconomic shift explains a lot about what happens to the stock we covered in recent weeks. Let's go ticker by ticker and see how these stocks held up against the macro. Whitehaven Coal in black is the clear winner. It's up 18 to 20% since January. The energy spike from the Iran war was a perfect tailwind for a company that had weathered well, low coal prices over the past 12 months. New Gold in blue had a solid run up early, was then acquired by Kerr Mining in mid-March at a premium. Shareholders got a nice exit before the gold crash really bit. Sandfire in orange started around $16 Australian, peaked near 22 and then gave back almost everything, down 17 to 20% net. Copper is industrial. The risk of environment from the war hurt expectations and higher energy costs squeezed margins. Greatland Gold in green, which is an amazing gold copper story, had nice early gains on the Havieron news and then a sharp reversal post-February. Same gold price drop killed the momentum, even though the project fundamentals we highlighted are still intact. Perseus Mining, which is a pure gold play, rode the early rally, hit highs in late January and then is down 10 to 12% year to date as gold sold off hard. The operational strength is still there, it's just the macro that overrode it. Aurelia Mining in the peach color, which is base metals plus a gold turnaround story, was volatile but still net negative. Gold weakness plus broader small cap mining sell-off did the damage, even as the Federation mine ramp up is progressing. Bottom line, well, the gold heavy names that we covered got punished by the exact same macro forces that lifted companies like Whitehaven Coal. The fundamentals are still solid, the macro just hit harder than anyone expected. So what's the big watch out from all of this? I always say it, and that is that no one knows how rock will break. Things are not always obvious, and it pays to have a long-term mindset and look out for solid fundamentals and prudent management. If you're new here and or you found this video interesting, please hit the like and subscribe buttons. Please check out our other videos while you are here. Huge thanks for watching my updates. Trade safe, and until next time, see ya.